Hey traders, welcome back to the channel. It is Monday, March 2nd. Hope you had a nice weekend and had some good trades today. I'm going to do my standard market report here in a second, but I wanted to make a longer form video today, but then I figured why don't I just combine my longer form video and the market update video into one video rather than making two separate ones. So here it is. As you know, the United States launched offensive strikes on Iran over the weekend, and you can pretty much be guaranteed that there's going to be some sort of effect on the market today. And so I actually went long today, and I went long on the SPY and Palantir. And why did I do that? Because war is big business. And although sometimes the market will fall out really hard the day after some sort of a military offensive, the one thing that I can think of that really sticks out in my mind is when Russia attacked the Ukraine. If you remember when that happened, the very next day, markets just plummeted, but then they came back like the day after that. So I thought there was a chance that we might fall out today, but I quickly saw that that was not going to happen, basically right after the open. And so I went long on the SPY and I went long on Palantir because, you know, Palantir is infinitely connected to the military industrial complex. And even though I despise war and I would much rather have all those young girls in that elementary school in Iran who were killed still be alive rather than me make a couple $100. We're living in the world that we're living in, and this is reality. And in reality, everybody needs to make money every day. And so I just figured, you know, war makes money. So let me go long on Palantir, and I did. And it paid off. And, you know, I only traded 3 contracts today. I wanted to be very, very conservative because although I had a hunch that things were going to pop after I saw a couple of things that I saw this morning, I wasn't thinking that I had a lot of confidence in that. So I kept it super small, but still, just with trading 3 contracts, in about 90 minutes, you can still make $260 like what I did today. Just goes to show you that even in the worst possible scenarios, when you think, okay, a war has started, everybody is skittish as hell, nobody knows what's going to happen, you can still make money. I mean, like, you can literally make money in any market. As long as you are quick, you get in and out quickly, you can pull the trigger on your entries and exits, you can make money. And that's exactly what I did today. So although the kind of like maybe the first level reaction would be, oh my God, everything's going to fall out today because we went to war. That is not how you should look at it. You should just wait and see what you see on the charts, and then make your moves based on what you see on the charts, regardless of what the news actually is. Because the news can be one thing, and then the actual chart can be something else that says a thing that you wouldn't expect it to say based on what you think it should say just on the news. Right? I know that might be a little bit, seem a little twisted up, but just pay attention to the charts and the candlesticks. And if you do that more often than not, you will have successful trades, and you can do stuff like what I did today and only trade 3 contracts and still make nearly $300 on those 3 contracts in about 60 to 90 minutes. So that was my little spiel for today. So anyway, let's get to the daily report. So as I was saying, the markets stared down a war and they blinked, and then they bought the dip anyway. Today was one of those sessions that tests what traders are made of. The US and Israel launched coordinated strikes on Iran over the weekend, as you know, killing Supreme Leader Ayatollah Ali Khamenei and ending his 36-year rule. Iran, unsurprisingly, retaliated, killing 3 US service members. And when the opening bell rang on Wall Street this morning, the fear was real. The Dow cratered 600 points at the lows. The S&P dropped 1.2%. The Nasdaq fell 1.6%. But here's what happened next, and this is the lesson for today. The buyers came in hard. And by the close, the S&P 500 had erased virtually every single point of those losses, finishing nearly flat at 6,881, up just 0.04%. The Nasdaq actually closed up 0.36%, ending at 22,748. The Dow was the laggard, still closing down 73 points at 48,904, but that's a far cry from being down 600 points. Okay, so why did the markets recover? 2 reasons. First, history. Wells Fargo data shows the S&P 500 typically turns positive within 2 weeks of a major geopolitical conflict and is higher on average 3 months out. Traders know this pattern, and many were buying into the panic rather than selling into it, including myself today. And the second is rotation. Smart money didn't hide, it repositioned. Defense stocks exploded. AeroVironment surged over 10% today. Northrop Grumman gained nearly 4%. Lockheed Martin climbed 2%. And RTX rallied 4%. Palantir, whose software powers defense agencies globally, jumped 6.3% for the biggest gain in the S&P 500 all day. And like I said at the very beginning of the video, that's where my mind was at before we even opened today. I was saying, I have a hunch that a name like Palantir is going to pop today. So let me just wait for a few minutes, let the open do what it's going to do, see what happens. And when I find my moment to jump in, let me jump in. And that's exactly what happened. Energy names surged alongside oil, with Exxon and Chevron each gaining around 4%, as Brent crude hit a fresh 52-week high above $82 a barrel. Meanwhile, Nvidia popped 3% after announcing $2 billion investments each in Coherent and Lumentum, optical tech companies building out AI data center infrastructure. Coherent jumped 14%. The market is saying, even in wartime, the AI build-out doesn't stop. And on the economic data front, the ISM Manufacturing Index came in at 52.4 for February, technically still in expansion territory above 50, but the price component inside that report surged, reigniting inflation fears. Treasury yields rose to 4.04% on the back of it as traders trimmed their rate cut bets. Airlines got crushed today. American dropped 5.5%. United fell 4.9%. Delta slid over 2%, all on oil price fears, which is to be expected. And Norwegian Cruise Line tanked 10% on weak full-year earnings guidance. So the real question heading into tomorrow is whether dip buyers will show up again, or whether the reality of $80 plus oil starts to hit harder. And Friday's jobs report is the next big test. Economists are expecting just 60,000 payrolls added in February. Will that happen? Who knows? We're going to wait and see. We'll find out on Friday. So until tomorrow, hope you have a good evening. And remember, like I was saying at the very beginning of the video, no matter what the news is telling you, the most important thing is what you see on the charts and what the candlesticks are telling you. The candlesticks and the charts are painting a picture. So if you can decipher what that picture is and make your moves based on what that picture is telling you, chances are you're going to do okay. So that's it for today. See you here tomorrow afternoon. Bye-bye, everybody.